Hello, everyone. Happy Friday. How is everyone doing? It's a banner day here in the Arnold household. We finally have proper high-speed internet. Only took 6 months to get it, and they had to dig up the whole street. Just for little old me. How is everyone doing? Good morning, Jacob. Good morning, Jacob. Good morning, McRangers. No problem, Sterling. Thanks for everything you do. Hope you have a good day at work. Good morning, Mark. Good morning, Daniel. Good morning, Ted. Good morning, Royal Palms. Good morning, Jake. Good morning, Patrick. You saw the duck. This is a Duck Friday. 4-hour bar confirms the double bottom of the last 2 days in the S. No, didn't quite get there. Didn't quite get there. We will go over that. We will go over that. So, uh, hold on 1 second. Sorry, I gotta walk away for 1 second. I'm coming back. Sorry about that. One of the dogs had to leave the office. Had to leave the office, one of the doggies. He did not want to stay for the live stream. So, all right. Good morning, Richard. What do we got going on today? So far, pretty quiet day. We had durable goods. Durable goods month over month coming in slightly better than consensus and about in line with previous. X transports coming in much better consensus. So we have the consumer sentiment number. I'm back. He's gone party. Ted, we're not partying because I'm gone. Oh boy. Oh, that's pretty funny. Consumer sentiment numbers coming out at 10 a.m. Eastern, so do not miss these, especially inflation expectations. Keep an eye on the inflation expectations. That's going to be very key out of those numbers today. Other than that, nothing besides your rig counts. So far this morning, everything green, Apple down a bit on iPhone in China, and Tesla after its monster day yesterday, taking a little pause, but not much. Colgate Palmolive, which had earnings this morning. Remember, it's also triggered a while ago, it triggered the Head and Shoulders top. So we can continue to see pullback, and even though it was a beat. Groups, everything's positive today, being led by real estate, out of all things. Fed watch, 25 basis point cut still priced in for under 2 weeks away. We're still in greed mode. Schiller PEs 37 on the dot. Yesterday, after the close, there wasn't much in terms of important earnings. Today, again, the only one I looked at was Colgate Palmolive, which was the beat, but down. You have the technical patterns still triggering, and that's it. Next week's going to be a huge week in earnings. Asked about the 4-hour. Asking about this. Now, this bottom, the ratio of the bottoms, it has to at least drop below the 75% harmonic, which is right. It's sort of hard to see the line, but it's right here. It did not. So this does not qualify as a double bottom. And on the other end, it could have, if it went down further, it could not exceed the 25% reverse harmonic projection. So it can be in this range. Now, the higher probability doubles, not something I talked, besides against the rotation zone and everything else with the rotation zone, the higher probability doubles fall between the 87.5 and 12.5% levels. The higher probability, this, if you're looking for the highest probability doubles, are the sweet spot. The bare minimum is between the 75 and 25. The sweet spot is between 87.5 and 12.5. There you go. There you go. That's exactly That's exactly how I do them. Okay. So a little bonus if you do one clarification. If you didn't understand that, little bonus for a Friday. There you go. So does this fall into that range? No. When we're in something like this going into a choppy area, I'm putting on this flagging pattern, and based off the highs that were set up on the 17th yesterday to the lows, or the 17th, that was last week, Thursday, to not yesterday, to Wednesday of this. These are the retracement harmonics. So now we're in this area 50 to 62 and a half. On this, any bullish breakouts, we had some bullish breakouts with the European Open today. The key level for me is 58.80 on this little chart for a follow through with the close. Now, tying the different time frames together, what's this? We had the percent B negative yesterday. So today's high is important. We've also pulled back into the rotation zone, consolidated, so this could be a percent B buy and a rotation zone buy. That's why I'm paying attention to Thursday's high and to see if we can follow through with a close above that. You'd also trigger the short-term probabilities on a close above 58.80 if we can close above that level. So if we close above 58.80 today, then it's a percent B buy, a rotation zone buy, and we've closed above the 62.5. Does that mean it's going to the moon? No, that means it's then shifting to retest this high area with the magnet price being around 59.11. But I would not ignore 5900. We also have daily cycles at the bottom. We still have to see if this can sustain. Yesterday could not sustain the buying pressure. It got sold. That's why it's for any bullish things, if I was looking to carry them, it would at a minimum have to close above yesterday's high. If that makes sense. Okay. On any pullback, the minor support level is about 58.61. The major support area is right around this 58.50. 58.50, you can go a little higher, 58.53 to 58.50. That's going to be the major support zone on any pullback. Good morning, Anissa. You are welcome, Daniel. Oh. Why are my comments frozen? Am I still coming through? I got a spinny wheel. There we go. Something happened on the Mac streaming computer. Oh yeah. Back in your seats. I'm back and I'm doing some teaching. So you see, you didn't want to miss this today, did you? I've never considered to trade gold intraday, but wow, it tends to move nicely for short-term swings. It's been some decent trading. I don't really do a lot intraday on gold. But that's where the best thing I find to trade intraday is the S&P, honestly. The Nasdaq's caught in this choppy range. Still, if we flip around this, could not get a close below the 62.5. If we flip around this to the little short mini harmonic levels, today watch 20,455. 20,455 can sustain that above the close because we could go into still a little higher price magnet going into next week. There's not a percent B buy on the NASDAQ. All right, the key support level on these sell-off is about 20,380. The harmonics that I'd use today on a continued rally would be 20,530 and 20,600 to 20,605. Seems like it wants to gravitate higher today, especially with some potential setups. We also in the Dow, if the Dow can close above Friday's high, it is in neutral mode. I mean, Thursday's high, that would be a little mini percent B buy. And my key target area would be about 42,996, so 43K. The very key support area today is 42,550. The Russell, and again, don't do anything stupid on a Friday. Please don't do stupid on a Friday. Russell, cycles turning up on the daily basis. The key little levels to watch right now, at least in the short term, the very short term, if we start getting above about 22.45, 22.59 is key. VIX just sitting in a consolidation range. Not much to talk about there. The DAX still holding the rotation zone, but the double is still technically in play, the double top. Still holding the rotation zone. This did not invalidate it yesterday. The notes, the 10-year, the actual bonds, consolidating. Cycles are turning up, getting out oversold, but so far just a sideways correction. The rotation zone is back at 111.19. Let's take a look at those yields. Little pullback over the last couple of days, but still holding above major support with the rising rotation zone and getting cycles rolling over and out of overbought with a divergence. So far a sideways correction. Yeah, a little pullback in the overall scheme of things. This is not even a major pullback correction. Dollar index, same thing. Little pause, holding above key support with a rising rotation zone. So a lot of these things that have been on a run, they aren't really pulling back. Remember, corrections happen two ways, either a sideways correction or a more significant pullback correction. So far, with the bonds and the notes and the dollar index, they've had sideways corrections. Crude, interesting, has not been able to, even with the probabilities for potentially pullback, has not been able to pull back at all. I'm really paying attention to this 72 level on a closing basis. That's more so for early next week, if it breaks out, because it's so far just building a slightly higher base. And if we look at, it's been stair stepping higher with higher lows so far, but there's no great setup. Gold, again, sideways correction. Put it in context. See, we've had this major run. Look at the weekly bar. It looks like a doji right now. That's because, yes, we've had some up and down, but sideways correction. This was more of a pullback correction, the last correction that took us to cycle bottoms. This, we're getting back to nearer cycle bottoms, and so far it's just a sideways correction. So I'm going to be interested, especially early next week, for potential another pop in gold. What else do we have? We have the yen stir. So far, still weakening, still not close above 153.56, but a sideways correction in this too, not a pullback correction. Seems to be a theme. Euro, little bounce. Remember, after finishing the double top, we had a little percent B buy yesterday, but remember, the target areas I use when it's going against the rotation zone is in the rotation zone. So this was really a tight setup. So this is not a longer term bottom yet. This is the little hint that we could get a little more strength possibly in the rotation zone, but I wouldn't be counting on a lot, especially with the dollar consolidating sideways. Not much to talk about. Bitcoin, we got the follow through close above. So we got a percent B and a rotation zone buy. No follow through yet. Keep an eye on this. It did close above the 62.5. It also put it in the potential double top territory. So that would be the only negative in the short term. What's interesting enough is still the technical stop on a percent B buy would be below Wednesday's low. But that would also trigger that at double top. So for any buy setup, for a couple different reasons, the stop is below Wednesday's low. Funny how the markets work. Doesn't mean it has to come down here, but that's what a fantastic little stop level for educational purposes only. Little mini double bottom in the Ethereum. So, would you revisit TLT? We can do that right now. TLT, which again has just collapsed back down, is now closed back below the 62.5, has shifted the probabilities back down. It tried to shift them up, could not hold the rotation zone, even on the weekly basis. So a couple back at the end of September, closing, taking it back to neutral mode, and then breaking key support, retesting that key support and rolling over. It's going to be real interesting today. Pay attention to this on the weekly basis if it can shift, close back below about this 92.70. Now, I'm going to be watching for more of a consolidation here. But if we close back below this, we could retest. We could continue to see yields on longer-term treasuries continue to climb after a brief pause. Also remember the rotation zone. Any pops in the rotation zone would now be for watching for rollovers. LIT. LIT. I don't know why this is trading so much. I know because of the electric car thing with China, but lithium, we actually have some major lithium reserves right now. So it's pulled back like without the stimulus, well, with the stimulus drying up, it's pulled back. But FXI, which I was looking at earlier today, you have a clear line in the sand. This has not been able to sustain any bounce. Okay? It's still holding the weekly rotation zone, but if we start breaking down below last week's lows, we could easily backfill into the 50 to 62.5. And that means the China stimulus just has been a fizzle drizzle. So this is not a terribly bullish setup unless China announces even more stimulus to try to pop this again. But it really wore off its luster quickly. I'm now watching to see if it breaks down below 30.65. Nvidia, continue to watch for this. It's had some divergences. It's still trying to hold the rotation zone. Yes, we are in still massive potential double top territory. But the next key cluster, if it does pop again, is 147. You're welcome, Richard. Again, it's sort of a, this end of the week, there's not much going on. Oh, I know it's not as interest to as many people. We have Colgate, Palmolive. Again, it was a beat. All right, but this has really lost its luster. It triggered the head and shoulders. We've had this on the chart. We talked about it with Sterling. It triggered, little flag pattern. Remember, after hitting the first target, this did not invalidate it because the invalidation point, the technical invalidation point, was a close above 105. Never got there. Just only bounced to the prior breakdown level right here. Now, next target 96.16. We're at 96.50. The real magnet area is this 94 area with the 200 and the final target on that head and shoulders over the next few weeks. I don't care if you don't trade this. I don't care if you're not interested in Colgate Palmolive. It's the more important that you learn to spot the patterns and then see how things can potentially line up with the harmonics, with the key moving averages, with the rotation zones. That's what's important to really learn technical analysis and charting from my perspective. Can you peek at RKLB? Ted doesn't want to screw it up. But celebrating when I walk away, Ted. Celebrating when I walk away. What is that? What is that, Ted? In at 350. So I hope you're raising your stop. Let's take a look at the longer term. You know, you almost got here. It depends on your time frame. Time frames matter. This holding above this around this 985 level is very important. And you see this on the daily. You got this rising rotation zone. You got the prior key resistance becoming support. Yes, yesterday was a little toppy candle, but a pullback into this area could be interesting. All right. So that, if I was in it for a longer term hold, would not bother me. If we started breaking below the daily rotation zone and then lost $9, I'd be questioning if I wanted to remain in it, unless it was turning into a super long-term holding for me. All right. So again, it depends on, see, look at the, here's, if we put on the harmonics, this was the key low back from April. This was a major pausing area. Again, for people asking how we choose harmonic levels, you see out there, none of these bars touch this, and it was a key confirmed harmonic pausing bar after this closed at the end of September. But look how this is a perfect example also of a sideways correction. Sideways correction, rotation zone catching up, breaking out. We had the two harmonics here. 1114, so you have it right around the 11 area. And see, you got another sideways correction. Then yesterday it popped to this 1199 and could not. And this is a very key area. Even up to 12. Okay, so keep that in mind. In order for it to really give more room for me, this then, after a pullback with a rising weekly rotation zone, would have to then push higher, get through about this 1250 area, and eventually get above 1466. But remember, anything between the 50 and 62.5 is a major potential topping area that it could struggle to get through. So, can't tell you how to trade it. I can point out the key levels, and depending on your time frame, you have to decide where your longer term stop is. All right, long hold, hopefully sold 18 covered calls for April and bought a few 9 puts for the end of November yesterday. Okay. Well, if it's a long-term hold, the real major long-term levels would be right around the $8 mark. Especially this weekly rotation zone is going to keep climbing up. So if this lost $8 on a really long-term hold, since you're in it down around 350, that would be, okay, we could revisit this major consolidation area if it was a long-term hold. Yes. Yes, there is, Daniel. Really, if you want a key rule of thumb to use, I'm trying to think what was a good double. If count the number, here's a key rule. If before it confirms, just like on this here, let me give you an example. Count the number of bars between the two bottoms. Let's just go off this. Let's just say double bottom here. Count the number of bars. So, including the side. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18. If you move more than 18 bars, then don't trade it as a double. So if it takes more than 18 bars to confirm, doesn't have to trigger, but confirm, then don't bother. So this one would be 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18. You see how it never traded above this peak? Take it off the charts as a double then. You can still watch this key peak, but take it off the chart as a double. Don't use the double targets anymore if you want an easy rule of thumb to remember. Does that make sense to you, Daniel? There, everybody got a lot of bonus teaching with the doubles. Since you tuned in on Friday. You're welcome, Ted. You got it. All right. Really appreciate with your generosity in teaching and early morning commitment. Sounds like you have completely acclimated to it. Some days, you know what? Instead of 4 a.m., I got up at 4:06 today. I got 6 more minutes of staying in bed, but I'm gonna still 4 a.m. is. I'm not gonna. I mean, I chose to move here, so I'm not going to complain. It will be interesting when everybody else changes time because Arizona does not change time, and that's coming up very shortly, which means for everybody else, the live stream should be the same time, depending on when you're trying. If you're also watching from Europe, it'll shift depending on when the time shift over there is. But for me, it means I won't be live streaming till 7 a.m. instead of 6 a.m. So I could theoretically get up around 5. I'll probably just shift it to about 4:30. Okay, here we go. Back to this. We had the high from yesterday. We're trying to move up into the open, sticking so far above the high from yesterday. See, little strong bar. Let's take a look at the tick. It's very strong tick opening. Very strong tick opening. So if the markets do not pull back much on the tick drop, then I'll be watching for a continued push higher, at least through Europe close. All right. There, everybody, I hope a lot of teaching. So I'd be watching, with the tick pullback, I would not want to see the S&P drop below 5870. And preferably not below about 5873. Look at that, straight to that 62.5 and pausing right there. So if we pull back at all and then rotate back up, remember 5880 is key. Try to teach as much as I can. And remember, learn these things and you got to make it your own. I try to teach what I look at. And then you get to research and make it your own. Don't just blindly follow things. So I say I can't give specific trading advice. You have to look at these and make sure it fits in with your style. I know it fits in with my style, but you have to determine what works for you. And I'd really learn the 62.5 rule. All right, with that, hope everyone has a wonderful day. For all the baseball fans, World Series kicks off tonight. We got more college and pro football. Great time of year, probably my favorite time of year in terms of sports with the World Series and then all the football. And headed into some fall, although we could hit 100 degrees here tomorrow. My sister's flying in from New York City tomorrow just for a day. But she'll get to possibly enjoy some 100 degrees before we cool off into the 70s by the end of next week. You are welcome. Thank you for tuning in so much, Anissa. I really appreciate everybody here. Again, if you want to rewatch this just for the clarification on anything I went over with the doubles, please do. And I will see you on Monday. Bye for... It is a dry heat, just like an oven. With that, we'll talk to everyone next week. Bye for now.